Hello, everyone, and welcome back to another episode of Mortgage Tech Talks. Today, I talk with Dan MacDonald. He is the founder of OwnWell, a new fintech startup specifically for mortgage professionals. We talk about his journey, how he got here, what are the tools he acquired along that journey to really help him in this new solution that he has. We talk about the really important considerations to have success in this market, things like having the right data, but maybe more importantly, setting the right expectations. And we kind of wrap it all up to talk about, okay, what are the dynamics of the Canadian tech market that allowed him to do it? What are the pros and cons with it? And how do we demand more as Canadian consumers? You're not going to miss this one. We'll see you on the other side. Truth maybe is that every time you put a document in an email, that is the most vulnerable place. Hey, Dan, great to have you here on Mortgage Tech Talks. Been trying to line this one up for a while, so it's great to finally have the conversation. I wanted to dive right into it, just, because I think there's a ton of stuff we want to cover in this conversation. But one thing I want to start with was just a little bit about your background. And I had no idea you had such a colorful background, I guess, such a diverse experience. So kind of going into that, and now you've ended up in the mortgage space, I guess, what was that journey, maybe just for the audience so they can understand you a little bit better? And how did you end up here, and what's kind of been your experience kind of contrasting Canadian mortgages to all the other places you've been?
Let's do it. Yeah, thanks a lot for having me, Tom. It's great to be here. Yeah, so my journey to where I am now has been an interesting, winding one. Started off drawing comic books professionally. That was my first career. It didn't last too long. When I got down to LA via Prince Edward Island, where I grew up when I was 17, I realized quickly that unfortunately that industry was in decline. And although I loved drawing, it wasn't going to be in that industry working for minimum wage. So decided to finish high school and go to university, which had never been the plan. While I was in Los Angeles for my internship drawing comics, my family moved from PEI to Vancouver. So that's how I ended up on the West Coast. Finished high school, went to UVic, studied business, was still trying to find a way to put together like a career and my creative passion in some way. Graduated just at the tail end of the financial crisis. Wasn't a whole lot going on for jobs, but found a job in marketing. Very quickly got bored. And around that time, started to see in Vancouver lots of startups popping up and, tech startups. And it all sounded pretty exciting. But I didn't feel like I had a whole lot to offer with my generic business degree. Didn't have any technical skills at that point. So enrolled in a boot camp for software development where they promised to teach you how to code within 3 months and get you a job. So I did that. It ended up being great. I learned a hell of a lot in a short amount of time. And then around that time, my friend Alex Conconi was starting a startup called Lendesk, and he was looking to hire a team of developers. And, he knew me well and trusted me. So joined him on that journey, was a developer there for a bit, quickly found my way to product management because I was finding that I was frequently resolving questions between the business side and the engineering side of the company, and realized that was a job called product management. And it's one that I really enjoyed. And the company was scaling and we needed more people that knew how to talk to customers and then how to translate their needs into requirements for the engineering team. So that was how I came into product, and then eventually was Lendesk's head of product through the acquisition by Rocket and our acquisition of Finmo. And now, this is coming up to 2022, and I decided that I really wanted to, do something of my own. And so did a couple of startup accelerator programs, tried a bunch of different startup ideas out, and then late last year came back around to the space I actually know something about, Canadian mortgage technology, and realized I wanted to solve a problem that I'd experienced as a first-time home buyer in the mortgage and real estate world, and that's how OwnWell came to be.
Yeah. Yeah. Winding path, that's for sure. Yeah, each of those experiences probably added up to kind of what you're doing now. I mean, of those experiences, each one probably do contribute, but it's a trend that I've noticed where people who kind of wear that product, I guess you could call it hat, end up doing something on their own. One that I see, I don't have any data on this, but maybe for that reason you described, which is like, okay, yeah, you understand the developing side, the actual coding side of things, but you also understand the business side. It's almost like a boot camp in itself to become your own founder. Do you think that's true? I mean, I kind of, for me, just so you know, Dan, I kind of joined Blue Mortgage, or I'd say Blue Root, the organization, as a product guy, and then I quickly transitioned to help build Blue Mortgage. And so similar but different, going from a product role to more of a founding role. Yeah, would you say that that's true? My assessment of that in your case, like, was that product experience over at Lendesk very translatable to what you're doing at Ownwell, and what was same, what was maybe a bit different?
Yeah, great question. So I agree with you. I think you're right. I bet that the numbers would back that up. And I think it's because you get exposed to all different sides of the business. You know, you're talking to customers, you're on sales calls, you know about the business metrics, and then you're also comfortable working with designers and engineers to, help solve those business problems. So I think that is a pretty good setup for wanting to build something of your own. I think what's obviously very different, of course, is just the stability of a job and, you know,
You're not staring into the abyss.
exactly.
Yeah.
So it doesn't prepare you for that, of course. But I think some of the functional skills are kind of set up in that role for sure.
Yeah, it can be a bit exciting staring out into that abyss, maybe, right? In that there's infinite possibilities of, things you can go to, but it's also terrifying at the exact same time. And one thing that I've talked about on this pod, and I've heard from mentors, and I've really liked is, okay, when you're in that, I guess, abyss, if you will, that very ambiguous space, the best thing you can do is focus on problems. I think a lot of people tend to focus on solutions, and I think solutions are important. I mean, Blue Mortgage, which I work with, is a solution, but in that point of kind of, I guess, swimming and trying to find that, solid ground that you can walk on and start moving, problems are going to be your guide, right? Talking to whether it's customers, understanding your own problems, whatever it might be. But if you can solve someone's problem, if you can alleviate someone's pain, that's so much more, right? An Advil is going to sell way better than the vitamin. That's I don't know, a startup thing, the painkiller versus the vitamin. But I think,
Yeah, yeah,
it's true, right? So I guess just to bring it all around, I mean, you talked about a problem you had as a home buyer. So did you come into OwnWell? Maybe you can first off talk a little bit about what OwnWell is, and yeah, what was that problem, right? Was it something you saw as a home buyer? Was it something you saw at Lendesk? Was it something just from talking to people? A little bit of all the above. What's the problem, I guess? What's that definition you're really trying to hone in on?
yeah. Great segue. I think for me, it was a realization of a couple things. So, okay, my wife and I, we got our first home, oh gosh, I guess 3 years ago now. I had recently received a happy birthday email from my mortgage broker. By the way, we had an awesome experience with my mortgage broker. He did a really excellent job getting us the right product. This is back in 2020, and he got us
The
into a really
madness
low
then.
fixed rate.
Yeah.
And I'm so
Yeah.
happy he did, and so I was really happy with that. Now, fast forward, a couple of years, hadn't heard much from him, and I get this very generic happy birthday email that isn't personalized. In my opinion, it wasn't really relevant to our relationship. Like, we're not buddies, we're not friends. Like,
Yeah.
why are you wishing me happy
Yeah.
birthday when I haven't heard from you in a couple of years? It was a little bit jarring, and then I was like, okay, this is kind of the state of things right now. And at the same time, I am constantly trying to figure out what we need to do to afford, a bigger home, really plotting our home ownership journey, really. And to do that, I know a few different data sources from having worked in the industry for a while. So I'm stringing those together. I'm running these calculations, and I was like, hold on a second. This is hard for me to do. And I actually have been in this industry for a while. I bet most homeowners don't have a clue what's going on with their biggest asset, which is kind of a crazy situation. But then at the same time, seeing this problem that my mortgage broker had, which was that he wasn't doing an effective job of staying top of mind for me in a relevant way. I don't know what the exact stat is, Tom, you might know, but there's a saying, I think it's something like 85 or 95% of clients would recommend their realtor, but only 20% actually use that realtor again. It's the
Yeah.
same idea, right? It's like, I had this great experience, but if you're not staying top of mind by offering relevant, personalized information, what are the odds that I'm going to think of you when our lives inevitably change and all of a sudden, we got to get a new mortgage? So that was the problem, really, was this problem of low relevancy, low personalization content, and how can we help keep mortgage professionals and real estate professionals top of mind throughout their clients' homeownership journey.
Yeah. Yeah. Interesting. And maybe one quick thing I can jump off of this, because this is something that I thought about, kind of preparing for this, and I'm interested your take is, why was this a mortgage broker problem, or why is this maybe a realtor problem? Why was it a problem of the professional versus maybe a problem of the client, right? So in that situation you described, you were the client and you were the one who had this problem of understanding what's my home equity and I have to solve it. And you went out and you pulled all these numbers together and you did that. And so that was kind of me reflecting, preparing for this conversation to say, well, yeah, maybe I would pay for something to kind of get that. I don't know if I would pay something every month or what it would be. So did you have that thought process, and what was your decision to say, okay, no, actually I think this is more of a problem for the professional, the mortgage professional, versus the end consumer?
Yeah, no,
Yeah.
absolutely. Well, I think, some of these direct to consumer businesses, frankly, like they're really expensive because acquiring those
Yeah.
end consumer customers, it's very expensive to acquire them. And then even if you do, I mean, I know myself as a consumer, like I'm pretty cheap. Like I am used to getting things for
Yeah.
free. If I have to pay
Yeah.
for software, like I really have to think about it. But then also knowing that, hey, like if we believe and we do that mortgage brokers are potentially leaving a bunch of money on the table due to, losing out on repeat and referral business, then if we can create an affordable solution for them that would help them like dramatically increase that engagement and generate more repeat and referral business, I would imagine that they'd be willing to pay. So we had a few conversations early on to validate that assumption, and that seems to be true from those early conversations. So that's why we thought it made sense, as it was just more commercially viable to
Sure.
solve their
Yeah.
problem, because it's a problem that they're encountering every day versus the problem of the homeowner, which is very infrequent
Right.
in comparison.
Totally. I listened to another podcast. It's called All In. I don't know if you know that one, Dan. If you listen
Oh
to it, it's a
yeah,
good one. Do you? Okay, great. We
absolutely,
should we
yeah,
should
for
chat about
sure,
that sometime.
yeah.
They talked about weeks ago or months ago how Netflix is just such a tough business because they have just massive churn. Like they churn through their book, like I think I don't know some crazy amount where like every 5 years they've completely gone through their entire client list because people are canceling and then signing up, and then a show comes that they like and they sign up, whatever, right? So completely agree that consumer business is tough from that perspective. And Amazon's kind of ruined all of us, right? We expect like same day delivery, like,
Yeah.
if it's not free shipping, I don't even want to look at it, for better or for worse, right? We've kind of been trained that way. So yeah, no, I totally get that. And I think it's probably true. Like when I was reflecting on that again, it's like, I'd love to know that for maybe 2 months. And then it's like, okay, by the third month or fourth month, it's like, okay, I kind of get it, right? Whereas as you talked about, the professional, they're constantly trying to engage, they're constantly getting new clients. This is going to be a continual problem for them, I'd imagine. So we've danced around it a bunch. We've talked about a lot of the problems you identified. Why don't you give me just kind of the elevator pitch, if you will, of, okay, what is OwnWell? What is this solution that looks to address all these problems that we've been kind of discussing? And yeah, love to hear just kind of exactly what you've put together and what you're bringing to the market.
Yeah, you bet. So we help drive repeat and referral business for mortgage and real estate professionals by helping their clients build wealth. So we're going to allow you, the mortgage broker, to share really valuable information that's going to help your clients as they navigate this journey. So the problem, discussed it before, but I'll just repeat it again real quick here. The homeowner doesn't have the information that they need to manage their biggest asset, which is kind of a crazy situation. And at the same time, mortgage brokers have a hard time staying top of mind throughout that whole homeownership journey. So this is post getting them that initial mortgage. So the solution is we're allowing you to offer highly relevant personalized content in the form of a homeownership digest or report that gets sent out to your clients with your branding and your profile photo and your contact information every month. And it's going to tell them things like the estimated value of their home, the estimated home equity that they have, what they can do with that equity, the maximum home price they could afford right now, whether or not it might make sense for them to refinance. And we do that all in a really beautiful, consumer user experience that generates a bunch of engagement. So the idea is you enter your client's mortgage data once, and then through the various data feeds that we have access to and all of our algorithms, we keep that up to date and we send those reports out on your behalf to your clients every month.
Yeah. And when you say data feeds, because there's a lot that goes into that, right? And you talked about, quick things. Okay, how much equity do you have, or what could you afford? But what goes into that are things like, I guess, of course, the value of the home, the rates that would be relevant, the term of the mortgage, what type of mortgage, what kind of, all these different things, right? So I feel that, correct me if I'm wrong, but I think that, the data is a huge piece of this. And I think that it's been, again, correct me if I'm wrong, about a huge focus for you is getting that data right. Because I think, for people listening, when they hear something like that, they think, okay, amazing, that sounds great. But the last thing I want to do is send out an email that says, hey, you have, millions of dollars of equity. And then, they call and they say, okay, well, actually, no, I don't know why that said that. You have, I don't know, $50,000 of equity. I don't know. I'm making an
Yeah,
extreme
yeah.
example to make the point, right? But I think that is something like that anybody listening, as long as if they had that level of confidence, I think it's such a no-brainer to have this type of engagement because it is so powerful. But I think that's always the hesitation in people's mind when they think about this stuff. So talk to me a little bit that, like, is my assumption right that the data is so important, and how have you kind of addressed that or thought through that?
Yeah, well, you are right. The data integrity is the biggest challenge of building this product for sure. There's a bunch of different data sources that we have to kind of marry up and make sure they handle all the different edge cases possible. So, we've got a live data feed of mortgage rates from Lender Spotlight. We work
Mm,
with
I'm-
one of the home data providers in Canada to get the price estimates for the home. We have the original mortgage application information from, the mortgage broker when they sign up. And so it's pulling all those things together and keeping them up to date. Now, I think you're right. The data is really important, and that's usually the first question that people ask. And I think
mm,
getting that data accurate is really critical, but it's not the whole story. And I'll tell you why. The mistake I've seen sometimes in some similar types of products is if all of the emphasis is just on getting the data perfect, it's not enough. The reason why is that information really requires context to be understood, I mean to say, in the right way by the end consumer. So if we give you a number, but we're not setting the right expectation about what that number represents, it can cause problems. And so the framing of all of this information when we deliver to the client is this is a starting point for a conversation. This information is
yeah,
directionally accurate, but it's not going to be perfect. These are estimates. And if you want to understand the actual rate that you would, qualify for, or the, actual equity that you could take out, contact your mortgage broker. And so I think it's important, but it's not the whole story. And the mistake I've seen some folks make when signing up and starting to use a product sometimes is getting stressed over their own data to the point of like
yeah.
fractions of a decimal when it's like, look, I, the homeowner, I don't care. I want to know approximately what my home is worth. And not only that, but what can I do? Like, can I afford a bigger home yet? Yes or no? Should I be trying to refinance, or do I have a good rate? Yes or no? Those types of things. So to sum up, the data is really important. It's the biggest challenge of building this product. And I think it's the biggest challenge for people that want to start using it as well, is getting the right understanding about what their clients actually care about, which isn't perfection in the data. It's what can I do?
I feel like that's such a good point. And, from our experience on the CRM side of things, it's absolutely the case where we see people, sign up for Blue and, they get their data, let's say 90 to 95% right. And if they just would flick the switch and start some of the things we do, they could start, seeing the benefit of all the things that Blue does. So without going there, but we also see those same people then get hung up and say, there's this 5% that's still missing. I'm going to take months and months and months to get this 5% right. When at the end of the day, again, going back to maybe being obsessed about the problem, not the solution, it's like, what's the real problem that I'm trying to solve for my clients, right? Is it having a pinpoint accuracy of exactly how much they can afford? Or like you said, is it these bigger swings to say, can I afford a new home? Should I have that conversation with it? And I think, yeah, so I think that's very true. And I love the way you put it. So I guess, we talk about the data being a very tough part and a lot of work that you've done to put into it, but maybe through your beta users or just kind of in developing the product, would you say similar emphasis has gone into the framing and actually how you deliver that information to the client? Has that been part of your iteration and actually really building out that product or building out the product? Is the
Absolutely.
framing side of things? Yeah, interesting. Yeah,
Exactly. Here's an example of something that we're doing right now around like the framing and contextualization is we're realizing that people were getting too attached to the predicted value of the home, which, as I said, like it's an estimate, right? It's an estimate. It's
right.
not meant to
Yeah,
be, thought of as like the price. So what we're doing now is we're adding an estimated range to accompany that
smart.
predicted value, which I think frames it more accurately, which is like, hey, this is a point within a range. This is the point that we think it might be, but really, you should think of it as being an estimate. And so that's an example of like the type of user experience considerations that we're applying. Also, I think this is interesting for some of your listeners. One of the biggest requests that we've had for the product is to be able to allow mortgage brokers to invite their realtor partners to it so that they can, begin
Mm,
co-marketing to one another's databases. So one of the things we're going to be doing next is allowing the client, if they see their price estimate and they think it might be off or they want to make it more precise, instead of us having to, worry about getting that price perfectly accurate, we can allow them to say, hey, I would like to get an expert opinion on my home
mm,
price. And then
right.
great, what we can do
Mm,
then, we can kick off a lead to the broker's realtor partner, keep the broker in the loop on that. And then all of a sudden, not only have we satisfied the client's request to have a more precise estimate for their home, but we've potentially generated a referral to one of the broker's partners. So that's another example of a way to solve the problem, to your point about problems, without necessarily like making the actual data be different in this case.
Yeah. No, I love that. It's one of those things where, yeah, framing is everything, expectations, right? I was listening to something recently. Really kind of all unhappiness, all frustration is expectations versus reality, right? So even if your reality is amazing, right? If you had even higher expectations, you're still going to have that gap. And so, again, that framing is huge. Like the expectation of a person to say, hey, my home's worth 900,000, great. And then they go out and the realtor says, actually, no, I think we can get 875. They're upset. Whereas if you say, hey, I think it's going to be 850 to 950, and they get that 875, well, their expectations have been properly set. And again, there's all those other types of benefits. So very cool, very smart. So I guess this is the part of the show where I push on you a little bit because we're CRM guys. You talked about that happy birthday example at the beginning of the show, and we do a lot of that. We do a lot of that happy birthday. So do you view yourself as, I guess, a direct competitor to the CRM solutions out there? Do you see it more complementary? And yeah, I mean, talk to me a little bit about that. And maybe I'll push back more, but I'd love to get your hot take on that.
Yeah, no, I'm really glad you asked that question. It's a question I get a lot, and I'm going to give you the completely unfiltered response here, and please push back on it. But it's complementary, is the short answer. So the reason why I see that is that the CRM is so much more than the outgoing content. It's where the journey starts before the data makes it into the submission platform. It's where you're managing your leads. It's how you're following up with your leads before they become clients. It's also where you're doing all of your reporting. And then also, I still do believe in sending out a newsletter and some of these other types of content. And so, where you can think of OwnWell in that process is it's added on at the end. It's an engagement tool, and it's not meant to replace the source of truth for your client data, where you're going to be doing your reporting, where you're going to be tracking your leads, all that stuff. So that's how I see it. I think like the perfect setup would be you've got your submission platform, you've got your CRM, and then you've got us specifically for generating engagement on an ongoing basis after the transaction's closed.
Yeah, I'll give you a pass for that one. And I think I mean, it was a bit of a baited question because I actually do know quite a few folks who are, I think, beta users of yours and they use Blue too. And everything that I've heard from them is exactly as you described it. There's that complementary component. I think that, yeah, I mean, for CRM for us, we've always been the guy, okay, we're the data guys. We're going to be able to have the place where you store your data and really kind of run that side of your business. And so much can come out of that, whether it's managing deal, whether it is staying in touch, or hey, do you know what? It's even doing reporting and some of that other type of stuff. So, I think that's true. And I think for us, and I think your guys are taking the tack too, where we know our lane, right? Where it's like, okay, hey, we are very good at all those things I just talked about, but we also recognize that there's great people out there doing great things like you're doing. For us to even start understanding the data, where to get those feeds, I wouldn't even know where to start. And so we want to do what we do really well and then partner with organizations, like you guys. And so maybe just to kind of pull on that thread a little bit in terms of partnering, I know we've had discussions about it before, and I think there's a lot that we could do. One thing that I think about is integrations, right? I think that's a big thing for a lot of people. It's a big part of what we've done at Blue, and we think it's really important. I think there's data integrations, but I think there's even opportunities to talk about, and this is again more from my biased perspective, to even merge these things together, right? Could we send out a happy birthday email and include a link to their OwnWell report as part of that, right? Now you're adding a little bit of context to that. So these are just some ideas that I've had. Love to get your reaction to, first of all, how important are integrations in your mind? Is that a big part of your strategy? Do you see yourself integrating with different systems out there? And how far into that are you willing to go? Is that happy birthday idea interesting to you? Do you kind of want to more own the interactions? How are you thinking about that?
I'm a big believer in integrations. That was most of what I did in my position at Lendesk, really was integrating with the different banks and lenders and, a number of the different systems that we had to integrate with. Also, if you look at the US, which is, a place I look at a lot for inspiration in the mortgage industry, is
Sure.
most of their most successful products, including the one that is the analog to OwnWell with HomeBot, is that they have these robust like integration ecosystems, and it seems like they've all gotten stronger by allowing them to integrate with each other. So I do believe in that. Another reason why I believe in it is frankly laziness. Like I love the fact that if we did something together, Tom, all of a sudden there's a bunch of possible customers that I didn't necessarily have to get in front of that might now be interested in signing up for OwnWell. So I just believe that partnerships is a great way to go, and I really love finding mutually beneficial relationships like that as a way to make the product better and to grow. So totally, I
Yeah.
absolutely see that being a part of our growth strategy for sure.
Yeah. Yeah. It's, partnerships. I think on the tech side of things, for us, again, it's just made so much sense. I always think about a partnership in two ways. There's the tech side of things, so let's get the data in, and that's so important to, provide that added value there. But then also even from, yeah, a marketing exposure perspective, I mean, if you can make it a win-win. I talked to a guy last week on the podcast, Jason Henneberry, which I'm sure you've heard that name or maybe chatted with him in the past. But in any case, yeah, he's huge on partnerships and finding those win-wins. And I would say make it a win-win-win, right? Where it's, if we were to partner, it's a win for you, it's a win for us, but it's also a win for the client, right? And if you can find those, and they're not too rare, and if you can, it just can really kind of take off, which is cool. Awesome. Well, I guess we'll put a pin in that side of things for now. I know we've talked about integrations in the past, and I think this conversation has just solidified for me that I think it's a necessary thing. I know you guys are early on and thinking through 100 different things right now, but I'll just put my name in the hat on that list there of people to work with someday. Maybe one thing we can kind of wrap things up with is I'm just curious a little bit. You talked about the US analog. I know that companies down there go out and raise a bunch of money and have to hit home runs and do that sort of thing. I talked to Ryan Wiley a couple weeks ago, or maybe months ago now, and he talked about that where in the US you got to hit home runs because you raise a bunch of money and you have to do that. Where in Canada, you're okay with more hitting doubles, and actually you can create a ton of value in those doubles, and you don't have to, go to the moon. You can find your niche and do that really well. So I guess again, do you agree with that? Is that kind of been your assessment and your experience so far with OwnWell? And if that difference exists between Canada and the US, why does it? I mean, I don't know if that's something you've given a lot of thought to, but I'm just curious more from the tech side.
Yeah, no, it's quite interesting. I mean, the fact that this is still an opportunity for me in Canada is due exactly to this dynamic that you just described, which is that, in the startup world, venture capital firms are only interested in funding companies that could become the next Uber, like multi-billion dollar
Right.
exits,
Yeah.
right? And really, you have to make the case that that is going to be what your company can become if you're going to get funded by those sources. And so that's why, and when we look at our industry, like in the Canadian mortgage industry, and sometimes in the Canadian like fintech world, we don't have the
Sure.
same nice products as you can get south of the border. And that's because it hasn't made sense as an investment opportunity in many cases, which creates lots of other opportunities for folks like you and I, where we don't necessarily need
Sure.
to have
Yeah.
a
Yeah.
billion-dollar company to have a great business in a market that we enjoy serving. So, yeah, the reason why this kind of difference exists is because of the market size and because the funding
Sure.
sources, the
Yeah.
typical funding sources for a startup aren't going to serve, a market in which they can't reach that kind of an exit. But I believe, like you, that that creates these amazing niches that you can create a
Yeah.
great business in, and you don't have to raise hundreds of millions of dollars in order to serve it.
Yeah. Yeah. No, I think that's exactly right. And the other thing I think with the dynamic, especially with fintech, you talked about, and of course mortgages go into that, is the regulation piece. So I couldn't, for me, just pick up HomeBuy. You talk about HomeBuy. I can just go buy HomeBuy. It doesn't make sense. It's not the same product. It's not the
Yeah.
same even market that they're doing valuations on and that sort of thing. And so I think it's the combination of smaller market and heavily regulated that creates this very interesting dynamic. And my personal opinion is that it's actually, in some ways, and there's always pros and cons, but in a lot of ways, I think actually almost better for the consumer, for the brokers and the mortgage professionals that we work with, that there's not this pressure, this dynamic for you if you went out and you raised $20 million to go out and be hyper aggressive and then double your prices and do all these things that might serve shareholders, but at the end of the day, not serve the consumer who's in it for the long haul. So I think that the fact that this dynamic exists, yes, it allows for these niches, but it also allows for dynamics which I think at the end of the day really serve the customer too. I mean, I think it absolutely allows for that.
Well, you know what? I think it depends. I'll give you an example of where I
Okay.
don't think it does. I think,
Okay,
and this
sure.
is another
All right, all
reason
right.
why this industry of
Yeah.
ours is quite unique. As you
Yeah.
know, in the US, I think there's something like 7,000 banks, right? And
Yeah.
in
Something crazy.
Canada,
Yeah.
like 80% is controlled by like five. And so
Five. Yeah.
our industry is just less competitive. Think about the bar that a new product or initiative would have to reach for one of the big banks to want to invest in it. They're more in the
Yeah.
like wanting to keep what they have game, because any change they make, like, is that really going to move the needle? The fact is, they don't have to do much to keep their existing business. They're just going to be really
No.
conservative. And
Yeah.
we're pretty complacent as Canadians with our banks. And I mean, for good reason, in that, like, we didn't have the same, problem with the financial crisis with our banks that, banks south of the border had. So south of the border, they've
Yeah.
got
Right.
people demanding better, And then the competitive landscape is such that, like, we don't have the same concentration down there. So there's all this competition. There's all these cool products emerging because of it. Whereas in Canada, at least in
Yeah.
terms of fintech, we don't have a lot of these nice things. Like example would be Venmo, right? Good example. Like people
Yeah.
come here from the
Oh
US, like,
God.
can I
Yeah.
Venmo this to you? And
Yeah.
so things like that. So I think, yeah, I think in some
What?
cases,
Yeah.
our kind of conservative nature in banking has helped us, and then in others, it has hurt us. So I think it's a mixed bag.
Yeah. Yeah. Well, it's way more competitive. I'm in New York actually right now, and you see it everywhere. Yeah. Hey, Venmo this. You can pay for stuff. Hey, just Venmo me. For anyone who doesn't know Venmo, it's this app. I actually don't use it, so I'm not going to do its service. But it's basically like e-transfer, but an app, and it's like 2 clicks and you're there. So it's yeah, completely get that point about the competitive landscape, and it's maybe just the bigger market serves it. So I think that's a good point,
Yeah.
and there's pros and cons with it. What would you say? I guess maybe just to pull on that thread a little bit. Now you got me curious and thinking, what is the solution if there's, a bunch of Canadians listening and say, yeah, Dan's right. There's just no competition. What do we do about it? Do we demand changes? Do we keep doing things like you're doing, Dan, of having enough startups pop up where it starts forcing the banks to take a look or allows smaller banks to compete more competitively? What do you think is the, a response for us Canadians in this kind of weird dynamic that we're in to, I don't know, fight against it is the right word, but start to get more on a level
Yeah.
playing field with our American counterparts?
Yeah. I love that question. I think, like, you just gotta demand more. Like, coming back to the whole idea of problems, Tom, like when you find a problem, like, don't put up with it. Like,
Right.
be annoyed with it and, build a solution for it, or, demand a solution from, someone that you're working with. I think that there are tons of cool opportunities in Canada because of this dynamic that we talked about to build, a great solution to a real problem. It just takes a little bit, I guess maybe more creativity in figuring out how to get that thing funded from the beginning, because you're not going to have these big venture capital firms, pouring money into an idea that's constrained to the Canadian market. But I think it's totally overcomable, and I think we just have to not be complacent. And when we find a problem, not put up with it.
Yeah, not put up with it and be an entrepreneur, right? I think that entrepreneur can take a lot of different forms too. It doesn't have to just be starting a tech company off the ground. Entrepreneur can be starting a different type of company, can be, just doing new things and new processes. And in my mind, an entrepreneur is someone who challenges status quo. So encouraging that entrepreneurial mindset, I think that sometimes, yeah, Canadians, we lack that a bit, but yeah, the more we can encourage it, the more, like you said, we're going to get more and more competitive. So I love that. And maybe that's a good place as any to stop. Dan, it was great having you on. This is fun. Really glad we had this combo. It lived up to the hype in my mind. So thanks for that. And maybe just to close, any, I guess, final thoughts and where people can find you, where would be the best place to get in touch?
Yeah, I really appreciate that, Tom. You can find out more about OwnWell at ownwell.ca, and you can get in touch with me there. And the other place would be Dan MacDonald on LinkedIn. I mean, I know there's about, probably a million Dan MacDonalds in Canada,
Yeah, I have the same
most
problem with
generic
Tom Hall.
North
Yeah. So
America.
yeah,
Yeah.
yeah.
But you'll find me. And yeah, I just want to say thanks, Tom, for having me. I love chatting about tech, obviously, and especially like mortgage and real estate tech. This has been a blast. And I think what you've built at Blue is really cool, and looking forward to future integrations.
Yeah. Love it. All right. Thanks, Dan. Have a good one.